This year's Bankers Conference, partly held virtually with renewed calls to leveraging on technology. The target, reaching struggling small businesses and low-income households battered by the pandemic.
Personally, I feel like the whole system has to work. Okay, it doesn't mean 100%, but at least over 70% has to work. One without the other doesn't work. If the commercial guys are working without the central bank on board, it will break apart. If the regulators are working without the microfinance, it will break apart. Insurance and all these different players around. The telcos. Because you have to remember at the end of the day, what we're talking about now is internet banking and internet-related banking and internet-related finance. Now, without the telcos in the picture, without connectivity, without data storage, all that stuff is a waste of time.
But to observers, a tough task for the industry, financing the building of those client-centric solutions or innovations financial institutions desperately need, at least right now.
Was the financial institutions currently use collateral-based lending a lot. And yet there are innovations, there are good ideas coming out there. So why do we constrain ourselves, or even the market, to only collateral-based lending? What about if you don't have it and yet you have good ideas and good innovations? I think that this is part of the learning which is also coming through this conference. And the innovations are happening in the technologies space, which help all services. And this by itself is also learning for the financial institutions that out there's a lot of innovation, and perhaps the way we appraise credit facilities should start changing and looking at the potential.
So we need another section or within the financial system that specializes in financing innovations, things like angel investments, things like private equity, venture capital, things like that, things like capital markets. We need to be able to develop and deepen those sectors so that then they can generate a sufficient pipeline of customers and clients.
Despite numerous policy interventions by players and the regulator, a lot remains to be done to bring majority Ugandans into the financial services ecosystem.
Very many people find it very difficult to get into the formal financial services sector because they either can't reach the service, or the requirements for getting there are quite difficult. Now, as an industry and as financial institutions, one of the critical things that we're trying to do is improve that ease of access, ease of account opening. How easy is it for you to get even a SIM card, to access that wallet, to open a bank account? I think it's a greater question.
1 out of every 2 adults would not be able to sustain their standard of living. That living that they had before the lockdown, for instance, if I was having 3 meals a day, if I was having 1 meal a day or 2 meals a day before the lockdown, I would not be able to sustain that lifestyle for even 1 extra day without me having to go to work. And that number will increase to 80%, or 8 out of every 10 Ugandans, if the lockdown was to be extended for 15 days.
Recent World Bank evidence suggests that digital financial inclusion could significantly contribute to economic growth, reduce poverty and narrow income inequalities without necessarily causing adverse effects on financial stability, given the appropriate regulatory framework.